I am buying a holding company which is quoting at a market cap of 100 and it is owning 200 shares worth of the subsidiary company, am I diluting or am I concentrating? For the same 100 rupees, I get 200 rupee worth of Finserv and Auto and the underlying companies. Discount rate continues to be 50%, right? Let us say the subsidiaries are quoted at 200 rupees and the holding company is at 100 rupees. If the underlying company doubles, let us say goes from 200 to 400 and discount remains at 50%, what will happen to holding company? The discounts have been narrowing in India and have not been increasing. I'll point you out to two European companies. There is a company called Heineken, which is the beer company, and there is a company called Heineken Holdings. I haven't checked the prices recently, but these used to trade at roughly 5% discount. It's only in India that you have these very, very large discounts. Okay, well, let me talk about a company that we do not own. Bajaj Holding is something called a core investment company, CIC. You can look up the regulations of CIC online. These are RBI regulations. They will only invest in their group companies. It's a holding company. Just look up Jio Financial Services and their application to convert to a CIC. Jio Financial will not be doing any business on its own. It will be holding shares of subsidiary companies which will do all these businesses. And the holding company publishes consolidated financials. So why should they not participate in the growth of the underlying?